Ram, thank you so much for that great introduction, and thank you so much for having me here. I'm super excited to share some thoughts with the audience today. As Ram said, we're going to be talking about why most traders lose money in the stock market and how you, as a private trader, can profit despite the industry scams, frauds, and misconceptions. So I'm going to be giving you a whole range of tips and techniques that all fall under the banner that I call the private trader advantage. So first, just a little bit about myself, if I may. As Ram said, my name's Adrian Reed, and I've been a private stock trader for over 15 years now. And I've been consistent and profitable for well over a decade. And today, I make hundreds of thousands of dollars a year working on my trading just 20 to 30 minutes a day. Now, I can't see and hear all of you, but how many of you would be interested in being able to do that? So some of the private trader advantage is what I've used to turn the tides in my favor, to get the advantage and to make money despite the best efforts of the industry to take my money. So we're going to be talking about the private trader advantage. What's so good about that is that you'll be able to profit despite the fact that easily probably over 95% of private traders lose money. I'd love for you to not be in that group, to be in the small percentage of winning traders that actually make money consistently. And we're going to help you move along that path today. How many of you realize that the finance industry is set up not to make you money? It's set up to make them and their shareholders money. And once you realize that and really deeply understand the game, that's where the key is, to turn the tides in your favor, to give you the better odds, and so that, to help you make money consistently. So the problem with the way the industry is set up right now is that they're going to make money at your expense unless you know how to play the game and you know how to tilt the odds in your favor. But what if there was a simple way to tilt the odds in your favor? Some changes in the way you approach the markets, your investing, and your thinking that would put you in front, that would put the money in your account, not theirs. How many of you would like that? That's what we're talking about today. And that's the private trader advantage. And let's get into it. So I'm going to cover 4 things. The first is we're going to talk about the industry, what's wrong with it and what the game is really about. Second, I'm going to talk about how you can succeed despite the industry, because there's lots of things that are wrong, but if you just make a tweak or an adjustment to your approach, you can really increase the odds of success. I'm also going to give you some keys to long-term success so that you can be successful not just today or this month, but well into the future. This is a long game. And if you're successful, when you're successful at trading and investing, that's what sets you up for the next 10, 20, 30 years of your life, to live in comfort, to live in freedom, to not have to go to the office every day, to be able to wake up, spend 20 to 30 minutes, place your trades, make your money, and then go about your life and do what you want. That's the freedom that I want for all of you. That's why I learned trading all those years ago. And finally, to really help you in the immediate short term, I'm going to highlight some of the biggest mistakes that losing traders make so that you can avoid them, so that you can keep more of the money that you do make and avoid some of the big catastrophic losses that hold so many people back. So that's what we're going to be covering today. Sound good? Great. So let's get into it. First, we're going to talk about the industry. So I spent 15 years working as a strategy consultant, a management consultant. And one thing that I learned in that entire time is that incentives matter. So now, no matter who I'm dealing with, no matter what sort of deal it is, no matter what sort of relationship it is, I've always got a mind on what is the incentive that's driving them. And if you look at the finance industry, it's really telling. There's a couple of key players that I want to talk to you about. The first one is your fund manager. Now, a lot of people invest in mutual funds, managed funds, unit trusts. That's all fine, but I want to make sure that everyone understands what's driving those players in the finance industry. So when you invest in a managed fund or a mutual fund, how do they get paid? They get paid by holding your money for as long as possible and collecting a small admin fee of 1 or 2% or maybe a little more year after year after year on your capital base. Excuse me. You see, the fund manager doesn't actually profit more typically if you make any money. The thing that they want to do is to take your money and manage it forever. This is why the industry markets a thing called buy and hold investing. Because the fund manager doesn't want you to trade. They don't want you to move in and out of your positions. They don't want you to come out of the market and go to cash when the economy is bad. What they want you to do is give you their money and leave it with them so they can collect their fat fees year after year after year. Now, a 1% fee might not sound like very much, but let's imagine that you had an expected profit per year of 10% by investing in a managed fund. 1% of that is lost because it goes as a fee to the fund manager. Now, 1 out of 10 is actually 10% of the total profit. And here's the crazy thing. You're the one taking all of the risk. It's your money. If the fund manager loses money, for you, the fund manager doesn't lose any money. They still collect their fee, but you lose the money. So you're taking all the risk and they get a big chunk of your profits at no risk. So their incentive is for you to not invest or trade actively. Keep that in mind. The second player I want to talk to you about is your broker, the one who facilitates your trades in the market. How does your broker make money? Your broker makes money by encouraging you to trade more frequently. So if you're managing your own money, you'll see marketing materials and brochures and advertisements about day trading and short-term trading and higher frequency. And the broker will make more and more money the more frequently you trade, because you've got to pay on the way in when you buy and you've got to pay when you sell. And if you're making multiple trades a day, you're absolutely making your broker rich. So every trade you make is costing you money and is making your broker rich. So when we place a trade, we've got to be dead certain that we have a winning approach, that we're going to come out on top. The next player I want to talk to you about is your software provider. So, you know, there's lots of different trading and investing software out there. I mean, if you Google trading software or investing software, there's all sorts of fancy, shiny websites that are willing to sell you expensive, high-priced, feature-rich software. And they're all competing with each other to have the most shiny, the most fancy-sounding names, the newest tools, and the most exciting-sounding functionality. Now, that again, that's all great, except they're going to make their money by you buying their expensive software. They make no money at all when you profit in the market. And when I'm looking for a partner, someone to support me, and when you're looking for a partner, someone to support you, you want to make sure the incentives are aligned. When I make money, I want them to make money, and vice versa. That way we're doing the same thing. Think about your data provider, the person, the company that you subscribe to for the daily data downloads that you use to make your trading decisions if you invest technically, or the fundamental information that you use if you invest fundamentally. How do they make money? They make money by you subscribing to their newest, their fastest, their most real-time service, because that's where the real fees are. But you make money by minimizing your cost and making the best trading decisions. So paying for high-speed data, real-time access, real-time news feeds, that's going to make a ton of money for the data provider. But you've got to be very careful as a trader investor about whether or not you really need that to make money and get the advantage. The next provider that I want to talk to you about is the system vendors. So if you Google for trading system or trading systems to buy or trading systems for sale, you're going to see lots of stuff out there and lots of really great claims about how wonderful the trading systems are. And again, the system vendor is going to make money when you buy their system. They're not going to make money when you profit from their system. It's a huge distinction. And so whenever they make a claim, it's trying to entice you to buy the system, the set of rules to trade by. It doesn't mean they're profitable, but it doesn't mean they've been developed well. You need to understand how to test and validate so that you know if that system is actually worth the money that they're selling it to you for. Then there's the advisory services. I mean, how many of you have had phone calls or have had subscriptions to trade advisory services or newsletters that send you emails or text messages every day or multiple times a day with trade advice? I mean, I've had so many phone calls from players like this, and I've even tested out a few of them on paper, not with real money. But their incentive is to get you to subscribe and to keep paying their fee for as long as they can. They don't make any money when you make money. All they care about is making themselves look good up front so that you subscribe to their service and you pay their monthly fees for as long as possible. And finally, there's the margin lenders and the people who provide you leverage. If you look in trading magazines and investing magazines, you're no doubt going to see advertisements for Forex providers, right? Who are offering 500 to 1 leverage or 1,000 to 1 leverage or 200 to 1 leverage and these sorts of things. Why? They do it because the more leverage they offer you, the higher the interest fees you pay them, the more commission they get in terms of spreads if it's Forex. That doesn't mean that more leverage helps the private trader. So what I'd like all of you to do is just take a moment now and think about what are your objectives. What are you trying to achieve in the market? Because if you're clear on your objectives, you can find ways of aligning yourself to the right providers or make the decisions in the finance industry that will best support you. Do you want to make more money? Well, yeah, probably. Most people do. Do you want to manage and reduce your risk? Again, probably. Most people do. For me, a big one is freedom. I want to make the most money I can with the least amount of time. I don't want to have to sit in front of the screen all day. I don't have to trade minute by minute all through the day. That's not what I do, and it's absolutely not what I'm about and not what I recommend to my students. I want freedom. I also want low stress. I want a low cost base so that it's easy to cover and support. So what about you? Hopefully some of those things have stimulated your mind. Now let me share with you, if I can, how you can succeed despite all of those industry pressures. Well, the first thing is when you think about investing in a managed fund, realize that buy and hold is dead, if it was ever alive. Putting an investment in a fund and forgetting about it for 10 years is just nuts, because you get a big bear market like we've had recently in in this decade, and or in the last 20, 30 years, there's been quite a few big down markets. And if you leave your money unattended in a managed fund for several years, you never know what's going to happen. You can end up down 30, 40, 50, 60% or more, depending on what you're invested in. So don't fall for the industry scam that buy and hold is the only way to invest. You can manage your investments actively, and you can make money, provided you understand the game. The second thing is your broker. They want you to trade more and more so they get more and more commissions. And a lot of people out there are falling for the myth that day trading and high frequency and sitting in front of the screen all day is where the money is. But it's not. I mean, I can tell you honestly, 30 minutes a day is the most I've spent in front of the screen doing my trading for years now. And I make very good money, because it's not how often you trade, it's how well you trade. It's how good your system is. So don't fall for the myth that you have to sit and trade looking at 5-minute bars or a tick chart, because it's just not true. And closely related to that is your data provider. You can subscribe to real-time data if you want. It's going to cost you thousands of dollars a year, probably. But I've traded with nothing but daily data for 12 years or more now. And that's made me plenty of great money and it costs very little. So some of the add-on services, the real-time stuff, is just not what you need if you want to get the private trader advantage. When you're thinking about software, there's two things you've got to do. The first one is learn how to develop and test a system, a set of rules for trading. Once you know how to do it, then you can use the software to do it properly. A lot of people do it backwards. They buy the fanciest software they can find and learn how to use the software. The trouble is, most software is not set up to make you succeed and develop a great trading system. All it is a collection of fancy bells and whistles that is basically a marketing trick to get you to buy the software. If you as a private trader, you get the private trader advantage by understanding how to develop a set of rules, how to test them, and then finding the right software to do that. And let me tell you, you can get software for about 300 bucks that does everything that you need. So you don't need to spend thousands on software either. Then there's the system vendor. If you're going to buy a trading system, my motto, trust nobody. I mean, I trust people in my life, absolutely. I'm a very open and trusting person. But when it comes to finance and money, I do my due diligence. If I'm going to look at a system or buy a system, then I'm going to test it for myself. That way you know it's real. That way you can trade it with confidence. Better yet, develop your own system, because then it's yours and you own it. And I can show you how to do that. And at the Super Achievers Summit in February, we're going to be talking a lot about how to do that, which is going to be amazing. With the advisory services, my guidance is to steer clear entirely. I mean, getting sent trade calls and advice from a newsletter about what to buy and what to sell, it's very hard to understand how they're coming up with the trades and to know if they've got a sound and profitable basis. It's very hard to know if they're going to generate a profile of profitability, an equity curve that you're comfortable with. So I just avoid them entirely. Learn to build your own system and you're going to succeed far quicker and make far more money. And then the last one was leverage in your margin provider. The big thing here is don't fall for the trap that you need to use a lot of leverage to make a lot of money. It's not true. And again, if you learn to test your ideas, like I have and like I share with my students, what you see is that actually increasing leverage improves your returns to a point, yes. But it also dramatically increases your catastrophic risk. And what causes people to blow up, lose all their money and exit the game? It's catastrophic risk. That's when something big and unexpected happens. So that's how you can succeed. Don't do what the industry wants you to do. Think about your incentives, because they're the ones that matter, and make the decisions that work for you for each of your providers. Okay, so what are the keys to long-term success? Well, first of all, I've already alluded to it, but the biggest one is use a system, a set of rules to get you in and to get you out of every one of your trades. Why is this so important? Well, frankly, human beings are just not very good at trading. It's no offense to you or to anyone else out there. Some people are naturally amazing traders, but most humans just don't have the objectivity, the consistency required to succeed long term. When I started trading, I was looking at fundamental information, I was making judgment calls, and I was looking at charts and 15 different indicators and weighing up the odds and deciding what to buy and what to sell. But here's the problem. The problem is when you get out of bed in the morning, if you look at your phone and there's bad news, if you stub your toe on the bedside table, if you walk out and have an argument with your kids, if the first thing you see on the television in the morning is a bad news or a terrorist attack or some financial problem in another country, and then you get stuck in traffic on the way to work, and then you have a debate with your boss that stresses you out, and then at work you sit down to place your trades, how are you feeling? If you're anything like me, chances are you're in a bad mood. You're expecting the rest of the day to be terrible. And so when you look at the markets, you're taking that mindset into the markets, into your trading. But the markets don't care about how you feel. The markets aren't a person. So that's not an objective way to make your decision. But it also works the other way. You sleep really well, you wake up, you have an amazing morning with the kids, you breeze to the office, your boss congratulates you on a job well done, you sit down to place your trades, and you're taking that euphoric positive mindset into your trading decisions. That may not work for you either. So those emotional swings are going to hold you back because it taints the decisions that you're going to make. So a system eliminates all of that emotion. Provided the system's profitable and you follow it consistently, it'll tell you when to get in and when to get out with no emotion. And the great thing about that, it also compresses the amount of time your trading takes. How many of you would be interested in doing that? Right? Compressing the time from hours to minutes. That's what a system will do for you, assuming you've got confidence in the system and it's profitable. The second key to success in the long term is to have an approach that fits you. I tried day trading a long time ago. It was March 2005. And I was in the office. I was working a high stress job. I was managing 3 projects at the same time. And I was also trying day trading because that's where all the glossy brochures were. And that's what the marketing material said where the money was. And I fell for the scam. And I built a day trading system that was hugely profitable in a back test, and I tried it. And I was in the office, and I was trying to manage these 3 projects, and I had my junior consultants come up to me and asking me questions, and I had the partners looking over my shoulder, and I was missing deadlines, and I was still trying to make my trades. And then the partner came up behind me and asked me for some materials that I hadn't given him, and I was late, and I made mistake after mistake after mistake in my trading. And I lost $30,000 before I even knew what was happening. Why? Because the approach wasn't right for me. I was working in a job that was high stress. There's no way I was able to day trade effectively under those conditions. It was the wrong strategy for me. And I learned it the hard way with a big loss. So if you want to succeed in the long term, my suggestion is to learn about yourself as a trader. And in my program, the Enlightened Stock Trader Certification, I talk about the T6 Trader Profile, which is the 6 components of your trading personality so that you can match a system and approach to you and your lifestyle so that you get that right and you don't have to suffer the sort of losses that I had. So ensure the approach fits you. The third key to long-term success is not to focus on making money. It's to focus on preserving capital. Why is that? Well, quite simply, you can't win this game if you're not in this game. So if you focus on trying to turn $10,000 into $1 million overnight, you're just focusing on the upside. You're going to take so much risk. Chances are you will lose everything. You'll blow up, lose your account, and you'll have to start again from scratch. Save up the $10,000, the starting stake again, start trading again, and probably make the same mistake. Warren Buffett says, number 1 rule of investing, never lose money. Number 2 rule of investing, refer to rule number 1. Because the more money you lose, the harder it is to recover. So preserve capital. Don't lose too much money. Don't take too much risk. The 4th key, very closely related to the 3rd key, risk way less than you think you should. How many of you have heard of a hedge fund called Long-Term Capital Management? It was a hedge fund run by a bunch of geniuses, financial geniuses in the 1990s. And it blew up and nearly took the world economy down with it. And what happened is they had an amazingly complex set of algorithms or a system that they were using to trade. And because it was very fine, very small arbitrages and profit margins that were making, they used huge amounts of leverage to make money. The trouble was they thought their system was so good, they were taking so much risk. When something went wrong, the whole thing blew up and it nearly took the world down with it. Even the best system generated by the brightest minds will send you bankrupt if you risk too much money. So risk way less than you think you should. The fifth and final key to trading success, to long-term trading success, is a written trading plan. A written trading plan sets you free because things will happen in the market that are going to stress you out. There'll be unexpected things, there'll be shock moves, you'll be called away on a work project, your computer might crash. But if you've thought through all of those things in a plan in advance, you've already made the decision about what you will do when all of these different types of things happen. And that way your trading can be consistent because you're not making emotional decisions when something unexpected happens. Because I have a written trading plan, I was able to leave the country, go and climb to Everest Base Camp, spend 3 or 4 weeks away from home, and leave my trading with my wife. And she just followed my plan. Now, not everyone might be comfortable doing that, but we have a great relationship. I talked through the plan. We were good to go. I went climbing. She went trading. Never traded a day in her life because I had a plan. And you need a trading plan too. And that's the critical piece of the private trader advantage. So what are the mistakes? We're a little short on time. I'm going to breeze through these really quick, and then we're going to take some questions. So the first mistake that most new traders make is letting losses get big. Most people don't want to lose money. I get it. But how many of you would rather lose $100 than $1,000, right? And so the easiest loss to take is when it's small. You see, you don't actually have to get very many trades right to make a lot of money trading. You just have to make sure your losses are small and your wins are big. If you have a small loss that you don't close and you let it get bigger and bigger and bigger and bigger, that's what kills your results and your profits. And that's what's going to stop you from making money. The second mistake private traders make when they're new is they don't let their profits get big. A lot of people are so keen to say, I made money, that they snatch $100 off the table and close their trade as a win. But if you have 900 wins and one $1,000 loss, how much money did you make overall? None. You lost money. But if you have 9 $100 losses and one $10,000 win, you've made a fortune. Well, a small fortune. So you've got to keep your losses small and you've got to let your wins grow big. Don't be so eager to snatch a profit off the table. Let it grow. The third one, and I've seen this time and time again, but there was a guy I know, his name was Adam. And he was trading and was making money. And he made money for a couple of months and then he got overconfident. And he decided, look, I've been making thousands of dollars a month. I want to make $20,000 a month, $40,000 a month. I'm doing so well. I'm awesome at this. So what did he do? He took on more risk. He traded bigger. He traded more often. Before you know it, again, boom, lost everything. Blew up his entire trading account, no more trading income, never traded again. Overconfidence is a killer. Consistency is what the private trader needs. Consistency is what you need to get the private trader advantage. The fourth one and final that I'm going to talk about today is trying to get even. I traded XYZ stock, but I'm down $1,000. I'll just buy more because it's cheap now, because then when it goes up, I'll make my money back. But this is a trap. Averaging down is a losing strategy. Buying a stock that you've already lost money on is a losing strategy. It may feel like you're getting even and making money out of that stock, but it misses the point. The point is every single trade is a new trade, is a new decision, is a new situation. So the way you get around this, the way you resolve it, is to look at every single trade or investment you make with fresh eyes. Don't say, well, I'm down, so I'm going to add more so I can get back. It's no. If I'd never seen this stock in my entire life, would I buy it now? If the answer is yes, great. If the answer is no, don't. Close the losing trade, walk away. Most of these problems are fixed, are addressed permanently when private traders develop their own profitable trading system that fits their personality, that fits your objectives, and that fit your lifestyle so that you can follow it consistently. And then you start to make money in a stress-free fashion. The stress goes away and the money starts to come more easily. And the great thing about systematic trading like that is it doesn't take very much time. So at the Super Achievers Summit in February, I'm going to be sharing more tips and tricks like this. I'm going to be talking about more of the process. We're going to go into how to control your risk, how to manage your trading so that you can make more money and keep the money that you make. So if you want to learn more, and everyone needs financial independence, and everyone needs multiple ways to achieve it. So if you want to learn more about how to make money in the stock market, then register now. Register for the Super Achievers Summit in February. Come along, learn more about how to invest, how to take control of your finances and your financial future. I'll be there to share it with you, and I would love to see you in person and to take your questions there and share more of my trading experience with all of you. So Ram, that's the crux of what I wanted to cover today. I'd love to open up for questions if you have any. So over to you.
Hi, hello everybody. Wonderful session so far. And Adrian, I have a few questions already coming up here. I will start with the first one. Manohar, the name of the person, says, Adrian, you said buy and hold is dead. I thought that was how we got appreciated returns. And Manohar goes on and asks this question, then how frequently should I monitor my investments?
Look, really great question. Now, look, I have to apologize. I say buy and hold is dead because it invokes a response. It makes people think, it makes you think, okay? What I don't want is for any of you to blindly place money in an investment and not watch it again. To believe the hype. I don't want you to believe the hype that if you give your money to a professional and leave it for 20 years that you'll be okay, because it's just not true. So how often you should monitor your investments really depend a lot on what the strategy is. If you're, let's say, you've selected an index fund that you're going to hold through a whole bull market cycle, and you want to have very low tax, and you want to have a very passive strategy where you ride the market up, and you're going to close it out when the bull market's over and the economy starts to contract. Okay, valid strategy. You're not going to monitor it every day or every week. You might check in on it once a month and have a look at it. But on the flip side, if you're actively trading individual stocks and you have a system that buys into rising trends and holds those trends until they turn around and come down, you might be checking those stocks once a day or once a week, just depending on the way the strategy is developed. So it's going to be a case-by-case basis, but it's definitely not a hands-off approach. I don't believe any investing is fully hands-off.
All right, Adrian, I know that you're speaking from Singapore, which is also in Asia, but I have an interesting question with another participant here named Vijay. Vijay asks, Adrian, will your method work in the Indian market? And all the time you talked about psychology. Can you give example of a system?
Very good. Excellent question. Thank you. I'm really glad that someone asked this because it's a critical point. What most educators do when they're teaching trading is they stand up on stage and say, when this happens, you should buy and you should risk this much. And when that happens, you should sell and you'll make lots of money. And that's the best way to trade. But what they really mean is that that's the best way for them to trade. My approach, what I teach, is a process to develop your ideal trading system or your trading approach. Because it's about you, it's not about me. And armed with the understanding of the process to go through to build a trading system that's profitable and works, you can go and apply that to any market. Now, I'm not an Indian national. I can't easily trade in Indian stocks, but I have tested systems on Indian stocks. And let me tell you, you can have very, very profitable trading systems. I've got clients in Singapore, Australia, the US, in Europe, other parts of Asia. They're all trading different markets because it's about a process and it's about the individual trader coming together to develop a system that works for them in their chosen markets. And the great thing about that is it sets you free. You don't rely on me. After you've learned the process, you can develop a system for anywhere. You move away from India or the time zone doesn't suit you anymore, you can trade the US market or you can trade the Australian market. You know, I live in Singapore. I don't trade Singapore. I trade Australia and Hong Kong mostly. I used to trade the US, but I don't anymore because from a lifestyle perspective, frankly, it sucks because you're going to be up late at night. And I don't want to have to do that. So I do my trading first thing in the morning and I'm done. So yes, it works in India. Okay, and Ram, right. Can you just repeat the psychology part of the question?
I think you did answer the question, but we have more questions here coming up. Sure. So let's breeze through it. And if there are even more questions, I will ask you to answer them offline so that we can convey them back to all the people. But let's try to cover as many as possible. The next question was, give me a second. Shilpa. Shilpa asked, she has two questions actually. So I'll go, I'll send them both to you. Number one, is day trading not good for everyone? I have a part-time job and I have enough free time to trade. So I'll let you answer that and I'll go to the next question.
Okay, great. Look, to me, day trading is the biggest fallacy, the biggest lie out there. Oh. Because the way the industry markets it, they make people believe that's where the big money is. Now, I know a few professional day traders who work for funds, but frankly, I've met almost no one who trades intraday, very short term, and makes better money than me. And I trade very long term. So day trading is absolutely not good for most people. And for most people, what do you really want in your life? Freedom. And sitting in front of a screen all day, day trading is not freedom. 20, 30 minutes with a simple system that trades on end of day data can set you free. So if you work part-time or full-time, you can trade. You don't need to day trade. And in fact, I encourage you not to.
Perfect. Shilpa has another question. Can we make money through short-term trading?
Yeah, good question. And absolutely. Because as long as you find a system or a set of rules that gets you in and gets you out that's profitable, you can make money over time. Now, the way I teach and what I target for my students is that they can independently find their own trading ideas and test them. And the great thing about that is it sets you free. You know, you want to trade shorter term, find a set of rules that makes you money. You want to trade longer term, find a set of rules that make you money. So there is money to be made in every time frame, from the nanosecond, which is what the high frequency firms do, very long term. The one caution I'll give everyone is that the shorter term you go, the more competitive it is, and the harder it is to make money because there's more noise in the data, the trading costs are higher, and the moves are smaller. So in fact, I encourage most people to start at the longer term end because it's easier to make money. But you can trade short-term moves and make money.
Got it. Awesome. So I have another question here. I'll just read out. It's from Manoj Shah. And he says, good morning, Adrian. I found your webinar very informative and interesting. So he's asking, like, can you explain what system you're referring? And he's also asking to share your contact information, which I would say that you are coming to India very soon, February 17th, 18th, and 19th. And Manoj, if you're watching this, you can meet actually Adrian in February 17th, 18th, and 19th. And coming back to the question is asking what system you're trying to explain or referring here, Adrian.
Great, thank you. Good question. And first of all, any of you who can make it to the Super Achievers Summit, I absolutely encourage you to do that. I'd love to meet people in person and have some of these debates and Q&A face-to-face. It makes all the difference. And I've got even more to share there. So please do register and come to the program. It's going to be great. Okay, so system. So the distinction I want to make is, first of all, what is a trading system? A trading system is a set of rules that will get you in and get you out of the market at a profit. It will tell you what to buy, when to buy it, and how much to buy, and then later on when to sell it. There's lots of different profitable trading systems. And the system that's right for you is going to depend on your personality, which is about your objectives, your lifestyle, your level of patience, how often you like to be right, many other things. So when I talk about trading systems, I'm talking about a set of rules that will get you in and out of the market. But there's lots of different systems out there. And in fact, you can develop your own fairly easily. And that's what my Enlightened Stock Trader Certification Program does. It shows you how to develop your own system. Because when you develop it yourself, you've got absolute confidence because you made it. There's no, skeletons in the closet that you're not aware of, or fear that maybe they're hiding something, or they've over-optimized it or curve fit it, or there's risk that you're not aware of because you built it.
All right. The next question again from Shilpa. Are you conducting any workshop after Super Achiever Summit in Bangalore? Which I would say, I would like to add to this, saying that yes, he may, considering if there are many people who want to get trained, but Super Achiever Summit itself is going to be a very big training platform where Adrian is going to share some of his really interesting content. Or to Adrian. So I'll let you answer this question.
No, look, absolutely. I mean, so right now my focus is about Super Achiever Summit and delivering the most value there. There will be opportunities to work with me directly in groups or one-on-one after and as a result of Super Achiever Summit. And with Ram, I intend to continue working in India. So that'll be something that we'll announce in the coming months and weeks. So just keep an eye out for that. First step, register for the Super Achievers Summit. Come, let's meet, and we'll connect, and I'll share as much as I can, and we'll take it from there.
And that also answers another question from Manoj. When are you visiting Mumbai in February? Are you visiting Mumbai in February? I would like to meet you. So Manoj, if you like to, we too would like to meet you. So come down to Super Achiever Summit in Bengaluru in February 17th, 18th, and 19th, and I'll make sure, I promise you that you will meet Adrian and speak with him. All right, so let's go to the next question. We have to quickly hurry up, like we are already, beyond the time. So one very interesting question, Adrian. Sam here asks, what is your idea about AI-assisted investing? Have you tried that? That's artificial intelligence-assisted investing. Even I have seen some articles in the newspapers and online media about this, but what's your take on that?
Okay, look, really good question. And technology and trading is going to be really interesting to watch in the next 2 to 3 years, let alone 5 to 10 years. So I'm going to take two perspectives really quickly. There's the private trader and there's the professional firm with millions of dollars to invest. So what I'm going to suggest is something like AI that's cutting edge, high technology, requires huge investment, technical expertise, high levels of knowledge and sophistication and complicated mathematics. is probably the domain, at least initially, of the professional firms. But what's great is that most of that is going to be focused at the short-term end, at the very high frequency trading. The private trader gets the advantage at the slightly longer term end with robust medium and long-term systems that get you in and out of the market with consistent profit. So you don't need to compete with it. But that's probably lucky because frankly, I don't think most private traders are going to be up to that competition. So I play games I can win. And I know which games they are. And it's not the ultra short-term, high-frequency game as a private trader. It's the longer-term game.
All right. Another very interesting question again from Vijay Prakash here. Do you think demonetization will affect the Indian market? Like recently, if you are aware, Indian government demonetized their higher currency, currency notes. And what's your idea about that? And what's your idea about the impact it's going to make in the Indian market?
Yeah, look, again, good question. I know the demonetization and the removal of the high value notes is a really critical kind of thing that's playing on people's minds for the Indian economy, particularly the cash economy right now. To be completely honest, as a technical trader, as in like a trader who trades with a system that tells me when to get in and when to get out, I don't need to worry too much about things like that. And in fact, if I trade trends, so something is going up and growing very quickly and consistently, chances are I'm going to be in that trade, and when it turns around and starts going down, I'm going to get out and make a huge profit. Now that trade could well be driven by something like a fundamental shift like demonetization, or it could be a trade in the other direction. But the world economy is hugely complicated, and so is the Indian economy. And so I actually advocate building systems, sets of rules that tell you when to get in and when to get out based on what's happening to the price of the instrument that you're trading. You want to buy something that's going up and you want to hold it for as long as it goes up. And when it starts going down, you want to sell it, and that's where you're getting to catch your profit. If something's going down, you either want to stand clear or short sell. So the monetization problem is question is a really great question. My answer is, what are the markets doing? What direction is price moving? If you observe your markets, you'll be able to see. And if you stay attentive to what's going on, better yet, have a system that stays attentive for you, then you're going to make money regardless of what happens, whether it's demonetization or a change of leadership or growth or contraction in the world economy.
Awesome. I had that question too, actually. Vijay came up with
that question.
Anyway, one last question. Does luck play a role in financial investment success?
Oh.
Okay.
Good. Great questions, guys. Look, luck. Okay. In the short term, there is an element of luck. But what you've got to do is put yourself in the path of luck consistently. How do you do that? You be consistent and systematic in your approach. Not every trade you make is going to be a winner. In fact, you can make money even if you lose on most of your trades, as long as your winners are big enough. So there's a bit of luck in terms of which trades you take when. But if you've got a system, a set of rules that get you into the market and get you out of the market with a positive expectation of profit, then all you've got to do is keep placing those trades and the winners will come and you will profit. So my success is not due to luck. Your success won't be due to luck. Every now and then everyone gets lucky and you want to be on the right side of that. But it's not just luck that makes private traders successful. Absolutely not. Systematic consistency, discipline, following the rules, controlling your risk. These are the things. The private trader advantage, that's what makes you profitable.
Awesome. All right. Amazing advice, amazing perspectives. What I personally liked, Adrian, was something that resonated with me was your advice on not trying to get even. like when we lost, and that's so actually I have lost money in trading, so probably that resonated with me very much, because as soon as I saw I am losing on that particular stock, someone advised me to go and buy even more of that. That's exactly what I did actually, and the results are not good. Like it never came back to positive, so I had to stop loss somewhere. So that one thing I realized I should have listened to your advice. Maybe had you as a friend a long time before I made these investments. Anyway, I look forward to having you here in Bangalore in Super Achiever Summit, and help us all with more clarity on the markets, on investments, and most importantly, the psychology of how to get this all put into play, and have our own system, and how to make it all work positively for us. And I thank you for your time, Adrian.
Thank you so much. And look, just for everyone out there on the webinar, if you haven't already registered for Super Achiever Summit, please go and register. There's a great lineup of speakers, not just me, there's a whole range of other really good speakers. There's all sorts of powerful stuff for you to learn. Please go register now, and I look forward to seeing you in Bangalore at the end of February.
All right, thank you so much. Have a nice day ahead.
Okay, bye for now. Thank you.